Welcome back, ladies and gentlemen. Thank you all for joining me today. And before I get started, if you see I have a Stranger Things t-shirt on, a big fan of the show, not going to spoil anything, love the newest season. But with that being said, what I am going to show you today is 5 different companies that I'm looking into currently, or have a position in, or plan to have a position in, or want to at least. And we're going to kind of go through that. And really the first things first is that I did this back in March. If you like seeing these kinds of videos, let me know down in the comments below. And if you have any companies you want me to look into, let me know in the comments as well. But it's very important that you subscribe to the video or subscribe to the channel, like the video. It lets me know that you guys like it and that you want to see more of this kind of content. But really what we're going to be going over today, and obviously I have my girlfriend's iPad in front of me because I don't have one. So I'm using this for notes. So if you see me look down, that's what I'm looking at. But really what we're going to be looking at today, we have Revolve, Teradyne, KLA Corp, Daily Journal Company, or Corporation, and then we have Micron at the very end. So pretty semiconductor heavy, and a lot of these semis are actually reporting this week that I'm recording this video. Today is Tuesday, the 26th of July. So you see this, and some of the semis already reported. Some of this information might be a little tiny bit outdated, but really it's about the long term and what I want, but the quarterly stuff might be a little different. But really the first things first is the first company that I want to dive into today is Revolve. Now, if you want to see more on Revolve, I did a whole entire video, but I'm really just going to try to go over kind of the high level things of this company. So Revolve is essentially a high-end luxury fashion brand that runs Revolve and Forward, and it's kind of like an online e-commerce marketplace where primarily females go to buy clothes, and they have a huge retention and loyalty among their customers. I think it's like 75% of people who place orders go and place orders again, which is great. And as well as they've been growing massively. Now it's partially due to the pandemic and stimulus and things like that, and people having a lot of extra income. But what I do think is that there are some great developments. So first things first, the active customers, orders placed, and average order value are all trending in the right direction. But please be wary that they have a lot of this is driven by stimulus checks and spending. What I pay attention to the most is customer retention and customer loyalty to Revolve. And since recurring buys means recurring revenue for Revolve. Existing customers typically place more orders annually than new customers at a higher average order value, resulting in existing customers representing 76% of orders and approximately 77% of net sales in 2021, up from 74% of orders and 76% of net sales in 2020, and 57% of orders and 58% of net sales in 2014. So I'm going to pop up the metrics here, but really these are the things I pay attention to, and just watching and making sure that these all correctly are trending up. And really the average order value is kind of bouncing between 230 and 280, so nothing crazy there as far as the average order value goes. One of the risks that I do see is that the comps, year over year are going to look really, really bad because people were spending a lot in 2020 and 2021 in terms of when they got those stimulus checks. It was really 2021. But a lot of the events and festivals and things have opened up, and concerts that people have been going to. So it'll be interesting to see over the next year how that plays out. But if you want to see more about what I'm doing in terms of this, there's going to be a link in the Substack article down below where you can see my original video, or you can just go to my channel and see selling puts on Revolve. It's one of my more recent videos. And then the last thing I wanted to mention as far as developments and risk was that the management does a really good job of managing the company. They did a fantastic job managing it through COVID. They actually cut their salary because of COVID, and obviously they own half the company, so to them the stock going up is probably worth way more than the salary that they're getting. But I do love to see that they take an ownership stake in this business and they see it as their business, which is something I really like, because every so often you get CEOs that they're like, hey, I'll take the salary, not my problem. So I do love seeing that. Valuation wise, average ROIC is 25 to 35% across the last 4 years. Their PE has been bouncing a lot. Recently, it's fallen down to 21. I think I got in this around 20 last time around when I had bought and then sold out. I think it was close to 80 when I sold out. So seeing it back down to 2021 is a great thing. Forward PE is 21.69. Enterprise value to EBITDA is around 16. And then I've sold puts on this company. So you want to see more, again, you can look at the Substack article, but I don't want to dive too deep into that because there's some other companies I want to talk about. Number 2 company is going to be Teradyne Inc. Now, really what this is it's focused mostly on the automated testing equipment industry in the semi-cap space. So essentially, they're trying to build out, being able to test semiconductors, and that way companies can identify process issues and things like that ahead of time, as well as they're trying to get into industrial automation. So you see like the robots and things that people have inside of factories. It's really going to be helpful to have sort of that helping hand from a robot that can do things perfectly, or at least, you know, way better and way finer than a human can. So they're really getting into that right now and ramping that up a lot. And you can see here on the segment summary what that really looks like year over year in terms of the quarterly. Really, one of the risks that I see right now is that the market for our test products is concentrated with a limited number of significant customers, accounting for a substantial portion of our test equipment. A few customers drive significant demand for our products, both direct sales and sales to the customer supply partners. We expect the sales of our test products will continue to be concentrated with a limited number of significant customers for the foreseeable future. And I believe one of the big customers they have right now is TSMC. So it is important that you understand kind of where this is all coming from, and I'll include a screenshot down here, kind of what they mentioned in their filings as far as customers go. One thing I also do want to mention, because they do a lot of international trade and they work with a lot of companies in Taiwan, China, and other countries, there are tariffs that could possibly impact them. Back when the Chinese tariffs happened, it does impact their business, or, you know, if something happens to, let's say, a supplier or something, or maybe even like someone that's working with them or contractor, that can be an issue as well. They said, though, that we enter 2022 with a strong long-term test and automation demand trends in place. We've increased our midpoint revenue and non-GAAP earnings per share estimates in our 2024 model to $4.9 billion and $8 respectively. However, in 2022, we expect a slower technology transition in one of our major end markets to result in a lower SoC test demand for Teradyne before accelerating again during the ramp of the 3nm production for 2023. Industrial automation, we expect high growth to continue in 2022. We've kind of seen that play out. That came originally, I believe it was from their 10K for the Q4 numbers. So going forward, I grabbed some of their stuff from the Q1 earnings as well. They said we delivered first quarter results ahead of the midpoint of our January outlook as we successfully resolved some short-term supply constraints at the Universal Robots. Entering the second quarter, the demand environment in tests has incrementally improved from our January outlook, with particular strength in automotive and flash memory end markets. In industrial automation, both cobot demand at Universal Robots and autonomous mobile robot demand at MIR remains strong. We expect the revenue growth rate to accelerate through the year. From a supply perspective, we continue to encounter material constraints in most product areas, and our wider than normal Q2 guidance range reflects those supply challenges. Teradyne's board of directors declared a 10% increase in their quarterly cash dividend, $11 per share, payable on March 18, 2022, and they're going to keep that going through the rest of the year. And I believe they had issued a $750 million repurchase agreement, and I believe as of Q1 2022, they've gotten about $200 million of that. So they still have, give or take, $550 million if they haven't already, you know, repurchased more of their stock in this last quarter. So you love to see that. I think there's a lot of a lot of buildup that we're going to see in that industrial automation segment. And really what I'm trying to read up on is where that all fits in to the industry that they're working in, you know, what it looks like in terms of the value chain of making a semiconductor and just what that looks like. So that's what I'm researching currently. Valuation metrics wise, the average ROIC is bouncing between 10 to 20% over the last 5 years. There is some cyclicality in their earnings, it seems like, but I think with the industrial automation being brought in, it'll hopefully smooth those earnings out a little bit. You can see their PE has been bouncing as well. It's currently at 18.74. The forward PE is at 20.75. Enterprise value to EBITDA currently is 12.15. And then again, they're repurchasing about 1% of their market cap. I believe that's actually come down a little bit. Their market cap's come down a little bit, so that might even be higher depending on when you are looking at this. So $750 million of the current market cap. Just make sure to take a peek at that when you're looking. Now, I'm still researching this. This is a company that I had mentioned back in March. I'm still trying to research sort of the industry and trying to understand semiconductors because it's very complicated. So I'm looking forward to this. I like the financials. I'm just trying to understand where it fits in to the value chain in terms of what do I need to pay. If it's a premium, if that's fine. If it's trying to get this at fair value or even below, significantly below fair value, that's fine as well. So the third one that I wanted to mention is going to be KLA Corp. This one I'm super excited about. You've done a lot of the research, and I think I understand this. Obviously, you're going to keep learning. I'm going to keep learning. and I've tried to read a lot on the industry that they're in, and I'm still learning. But really, what their focus is they have a couple different segments. So the first things first is the semiconductor process control. So this is really the bread and butter of this company. This is what the big portion of the revenue is, and you can see that here on the screen. Big portion of the revenue comes from that. And then next you're going to see specialty semiconductor process. Along with that, you're going to see PCB, display, component inspection, and then they have a lot of things that fall under other. One of the great things that I like about this too, and I've been watching their investment presentations and really just trying to understand what management is doing, how they're performing, and they have a lot of people on staff that are very, very, very intelligent. They have a lot of people in their just management in general that have been there for years and years and years, and they're returning a lot to the shareholders. But all that's great and all, but what does that mean for the company? And one of the things I like seeing is they have a lot of products. I think it was like 100 machines or something like that are still in use from years and years and years ago, and they're just getting service revenue. So you sell the product, you give it to whatever fab or IDM that you're trying to work with, and all of a sudden they're going to use that product for the lifetime of its however long it stays, and you get to earn service revenue on that. And it seems like a lot of times the service revenue is now beginning to overlap whatever the initial sales price was from that machine. And with a lot of the new process nodes coming out, and as we get smaller and smaller and smaller and things get more and more complex, KLA is really going to benefit from this, because their goal is to get as many semiconductors perfect as possible for the fabs that they're working with. Because the thing is, I think they had mentioned, if each step hits a 99.9 or 99.75%, no errors, there's 99.75% of the time there's no errors, they're going to lose a lot of chips if that's not perfect. So I think that the process control is very, very important, and they really do harp on that. Now, I think the growth is probably going to be anywhere from 5 to 10% on the revenue side. It seems like that's their target anyways. Go check out their investor presentation. They have a lot of like long-term models and things shown out, but I really do like the management. I like where they're at right now. I just think maybe it's at a slight premium, but let me just go through some of the developments and risks that I see. So the first things first, the increase in semiconductor needs and complexity will benefit companies like KLA over the long term, especially because they have a large market share. The process segment control, they have, I think it was like 50% in the process control space. I think 50% market share, which is pretty big, and that space is only growing. So and again, it's a really high switching cost for you to go from a KLA to a different machine if you don't need to. So the more complex these machines get, the deeper these relationships get, and the closer these relationships are with KLA and the people that they supply to, it's going to be really hard to replace KLA in that process. Now, a risk that they're willing to take on, they're going to take on a little bit more leverage. They talked about this in their investment presentation. They're willing to take on, I think it's 2.5 times, 3 times the leverage of the whole company. So I don't like seeing leverage if it's not needed, but it's something I'm going to be watching, and I'm looking forward. I think their 10K comes out either tomorrow or on Thursday. I'm really looking forward to that. I really think it's going to be interesting to see, and tomorrow being Wednesday the 27th. So it'll be interesting to see what kind of debt they're going to take on, what they're looking to do with that debt. And then the last thing I wanted to mention was that there's a lot they have a lot of geographic diversification, for better or for worse. You can see here about 29% of their 9 months revenue came from China, 29% came from Taiwan, 16% came from Korea. So you can see 10% is from North America. That's kind of crazy to me. You get a lot of diversification of sales here, but the problem is, again, similar to Teradyne, if something happens with those relationships between the countries, it can be really, really hampering to the company as a whole. So if you're going to get into this, make sure you understand the risk going into this. If 50%, almost 50% of their revenues come from Taiwan and China, if something happens to that relationship, it's not going to be very good. Even if they have, a great service business and everything. I do think, though, that the revenue on the sales side for United States will probably come up a little bit because of the fabs that are going to be built here in the United States. So that'll be interesting to see as well. The last thing I want to mention is that they authorized $6 billion in share repurchases, and of that $6 billion, $3 billion of that was in the next 3 to 6 months of them announcing it. So I think that was June 2022 is when they announced it. So the accelerated repurchase should be done within the end of the year by 2022, with the remaining of that being purchased over the next 12 to 18 months. They also raised their dividend from $1.05 a share to $1.30. So a 24% increase in dividend along with a repurchase. They're trying to give back to the shareholder. I think they said it was like a 5 or 6% that they're giving back in total is what they're trying to do. And their goal really is long-term to give 80% of their free cash flow back to the shareholder through the repurchases and the dividends. I can see this dividend growing massively over the next coming years. It really comes down to, what premium are you paying and what dividend yield can you get on that? I think if you can get in, I'm hoping, I really, really want to get in around the 2% dividend range to kind of get that sweet spot of where the multiple and those things hit. But if I got to pay a little bit of a premium for a company like this, I'm totally fine with that. Valuation metrics wise, the average ROIC I've been able to see is bouncing between 15 to 25% over the last 10 years. Their PE currently is 21. That's a little higher than it has been in the past 5 to 10 years. Forward PE is 14.73. Enterprise value to EBITDA is 13.79. And then again, they're repurchasing about 12% of their current market cap. The current market cap, as making the video, is like $50 billion. So for them to be repurchasing, $6 billion of that, that's quite a bit. And so it is interesting to see. I'm curious to see how that plays out, but they're very keen on giving back to the shareholders. I just hope that isn't at the expense of taking on more debt and leverage. So I'm looking at this around the 280 mark, and I'll probably make a full video on this and some of the other companies as I kind of get more and more comfortable with it. But I'm looking at the 280 mark, but I'm going to continue to research and understand the industry along with, where KLA fits in all this. Now, the fourth company that I want to mention is going to be Daily Journal. And I had no idea that this company, it was the way that it's structured, everything, nothing makes sense until I started hearing some presentations from Guy Spear and Matthew Peterson on it. And it threw me for a loop that this could happen. And, it's I think it's like $370 million market cap, somewhere around there when I was looking at it. But so when you look at Daily Journal from a high level view, what is it? It's a news publication that's run by Charlie Munger and a couple other great investors. And really, it's not solely run by Charlie Munger, but that's the name that you're going to attach to it. So to see it though, and have the way and the segments that they have, so you have the journal publication. That's going to probably go to zero over time. It's doing fine now. It's worth something, but in terms of value in this business, I just mark it as zero. Their investment portfolio is pretty massive. I believe the portfolio value as of Q2, they just put out their 13F filing through June 30th, 2022. It's going to be around $174 billion or $174 million, excuse me. In terms of the investment portfolio, and that's only for the items that show up on 13F. There's a ton more on the balance sheet that show up under the investments, but Charlie Munger, like with Berkshire, doesn't want to share anything foreign that he doesn't have to. So, they're invested in things. There's some things that aren't going to be, disclosed, and that's totally fine when you have a good investment manager running the portfolio, but I'm curious to see who takes that over from Charlie. The third thing is, and really the opportunity here, is going to be Journal Technologies. Now, Matthew Peterson and Guy Spear talk about this a lot, and it's something that I'm currently looking into right now. But Journal Technologies is basically a SaaS business that is going to sign up companies or courts, really, courts and prosecutors and DA offices and all sorts of different entities that interact with the courts to this court database management system. And the whole goal is to be able to bring everyone into the 21st century and make sure that everyone is operating on a current system and not doing everything through paper or doing everything on a legacy system. They actually shut down their old legacy system to try to get people to go onto their new system. Now, the problem is that this business model takes a long time to implement, because you have sort of the request for proposal that takes about a year. You have to work through all that. There's a lot of bureaucratic processes, and it takes a couple more years to really implement it, get the money, get the funding and everything. And so you have these long 4 to 7 year deals that don't show up on the balance sheet, don't show up on the income statement, because they haven't happened yet. And the way Journal Technology bills, it doesn't bill until they hit the final go live date. So you're not going to see any of these contract costs, any of these billings come in until they go live. So there's a lot, and I mean, for the portfolio in general is almost, I think it was like 250 to 300 million of the total, assets on the balance sheet, and then you have basically almost $100 million general technology business under this as well. So it's almost like it's going to be shooting fish in the barrel. Obviously, there's risks, things that I want to go through, but here's some of the things I want to touch on. So the investment portfolio really does create a floor. They're primarily invested in financials, as you saw earlier from the 13F filing, and this is obviously run by Charlie Munger himself. And I'm sure there's some help on there, but really, when you look at it, you see Charlie. But the portfolios needs to be taken over by someone else, and I'm curious to see what they do with that money. Journal Technologies has a lot of sales that have gone through the RFP process but have not made it to the revenue category of their income statement because they wait to bill until the system is completely online. Now, this is, again, a risk, and the thing is, though, is a lot of companies can't afford to do this. They can't afford to wait 7 years to finally get to bill. They have to set up this differently. And so the nice thing is that a court can actually utilize Journal Technology as a database system and have them manage the software and everything. And all the court has to do is pay licensing fees and pay consulting fees and any sort of manufacturing or service or whatever they need for their own court system. And the nice thing is too is that they try to customize it to what the court needs. It's not like a one size fits all like a Microsoft Word or Office or however you want to see it. One of the risks I do see is that the management is very old and there seems to be sort of a workplace culture issue right now. If you look at any of the reviews of, working there, it seems to be like there is some work culture issues that need to be worked through, as well as, their Journal Technologies isn't going to see a lot of that revenue for the next 5 to 7 years in some cases. Now, this does create a moat if they're able to, hunker down into these individual courts, but Tyler Technologies is currently the dominant market share in this space. And so Journal Technologies can sort of eat away at that and sort of lock people down. It's going to be a lot of high switching costs, and it's not going to be, feasible for a lot of workers to want to switch to Tyler Technologies after they've implemented this Journal Technologies. So it's really up to Journal Technologies to get into these courts, get these processes going, get in at a reasonable price for the court to pay, and then continue with that licensing and build up the licensing fees and things so that way they can generate revenue over the long term. So valuation metrics wise though, it's not going to look good again because there's a lot of things that aren't really on the earnings. Average ROIC is anywhere from 3 to 5% over the last 10 years. PE currently is at 18. Forward PE is non-applicable. I believe the growth rate was negative. The enterprise value to EBITDA was 3. I'm looking into this a lot right now. I'm really doing a lot of research. I'm trying to look up the contracts. Actually, I've found a couple copies from LA County and, over in Australian things. So I'm trying to look into what these contracts actually look like. Matthew Peterson has done a ton of work. Go check out his videos and talks and things on it. But I'm following the breadcrumbs that he's left. And hopefully in the next month, I can begin at least somewhat of a position, if not a full position. So last but not least, I want to talk about Micron. And this one, I don't really know too much about, so I'm not going to try to pretend like I do. I do know that they work heavily in DRAM and NAND memory. And that is really, there's only 3. There's Micron, SK Hynix, and there's Samsung. Those are the 3 basically big players in both spaces for as far as memory is concerned. So when it comes to memory, it's almost like an oligopoly. You have a lot of companies that are trying not to, there's not really an easy way to get into that space without acquiring the software from someone else or the manufacturing process from someone else. SK actually got part of their NAND business from Intel not too long ago. But really, development-wise, you can see here that they believe that the growth trajectory of DRAM and NAND is going to be, massive over the next coming years, and they believe that Micron believes that they're going to be the #1 market share in terms of DDR5, which is the new RAM memory that's coming out, and well, it's really out, but it's coming online more and it's becoming more common. You can see here the DRAM and NAND revenue are going to be growing over the next coming years. They believe it's almost going to double over the next 10 years or so, 9 years. So they believe though that having the market share leadership is very, very important, and you can see here all the products that they have the leadership in, or they're, you know, top 3, top 1, or where they really compete. And I think the big thing is that the DDR5, along with the automotive industrial, will be huge over the long term, because as these things become more and more complex, as these things become more and more prevalent, you'll see more and more RAM get consumed, especially at the higher levels of you know, computing, as far as GPUs and things like that go. The thing is, though, is that the memory industry is very cyclical. So as the CapEx spend goes up and down, as people need different things, as, you know, the general economies go up and down and memory prices go up and down, it becomes very cyclical, which is why you see, if you look at the earnings, you can see that it keeps going up and down. The PE goes up and down. So going on to the valuation metrics, and just so I can point this out, the average ROIC is between 5 to 20%. That's huge, you know, up and down cycle, along with the PE keeps bouncing as well. So right now it's at a 7, but if the earnings are going to be dropping, that means the PE is going to go, really, it's going to be maybe like a 15, 20 or something like that, depending on how much it drops. So they believe the forward PE is 8.66, depending on how you know, earnings go over the next couple of quarters. Could go up, could go down. So we'll have to see and keep paying attention to that. Enterprise value to EBITDA is 3.61. I'm still researching this. I'm just starting this, very, very new, very, very fresh. So anyways, though, if you are interested in any of these companies, let me know down below. If you have any other companies you want me to add to this list, or want me to look into, make a video about, let me know down below. I'm going to link a Substack and everything else that I've talked about in this video down below as well. But do not forget to like and subscribe. Thank you all for joining me today. Have a great day and happy investing.